Hello everyone and welcome back to the channel for a comprehensive analysis of the current market structure regarding Bitcoin and the Tether dominance chart, which is showing us some incredible signals today. We are looking at a very critical junction in the market, where the price action of Bitcoin is testing a major supply zone that has been acting as a strong barrier for the bulls over the last few weeks. When we zoom out to the daily time frame, we can clearly see that Bitcoin is forming a consolidation pattern that usually precedes a massive expansion in volatility and price movement. The momentum indicators are currently resetting, which suggests that the bulls are gathering strength for the next leg up, but we must be careful not to enter positions too early before we get a confirmed breakout. It is essential to look at the volume profile, because the trading volume has been declining during this consolidation phase, and this is a classic textbook signal that a big move is coming very soon. If we look at the USDT dominance chart, we see an inverse correlation that is playing out perfectly according to historical trends. The dominance of Tether is currently sitting on a critical support level, and if this level breaks down, we will see a flood of liquidity moving into Bitcoin and other major altcoins. This inverse relationship is the most important indicator you need to watch right now, because a drop in USDT dominance almost always guarantees a rally in the crypto market. We also need to discuss the moving averages, because the 50-day moving average is curling upwards and preparing to cross the 200-day moving average, which would trigger a golden cross event. This technical event is often seen by algorithms and institutional traders as a massive buy signal that could push prices significantly higher in the coming days. However, we cannot ignore the bearish scenario, where Bitcoin gets rejected at this resistance level and refers back to test lower liquidity pools. There is a significant amount of open interest in the derivatives market right now, which means there is a lot of leverage in the system, and this often leads to a long squeeze or a short squeeze to flush out the over-leveraged traders. You should be watching the funding rates very closely, because if they get too high, it means the market is becoming overheated and a correction might be imminent. The relative strength index on the 4-hour chart is showing a hidden bullish divergence, where the price is making lower lows, but the oscillator is making higher lows. This discrepancy often hints that the selling pressure is exhausted and the buyers are ready to take control of the market again. We also need to consider the macroeconomic environment, because any news regarding inflation or interest rates will have a direct impact on the risk appetite of investors and subsequently the price of Bitcoin. The order book depth shows us that there are massive buy walls sitting just below the current price, which should act as a safety net in case of a sudden flash crash. Bales have been accumulating Bitcoin during this sideways movement, and on-chain data confirms that coins are moving off exchanges into cold wallets, which is a supply shock signal. If we break above the immediate resistance level, the next target will be the psychological levels that historically trigger retail fear of missing out. You must manage your risk carefully in this environment and use stop losses to protect your capital from sudden volatility spikes. The Bollinger Bands are tightening significantly on the daily chart, and this squeeze is one of the most reliable indicators of an incoming explosive move. Traders should remain patient and wait for the market to reveal its hand, rather than gambling on the direction of the breakout. The stochastic oscillator is currently in the oversold territory on the lower time frames, which supports the idea of a short-term bounce back to the upside. We are also seeing a cup and handle pattern forming on the weekly chart, which is a very bullish long-term structure that targets much higher prices later this year. The relationship between Bitcoin and the traditional stock market indices like the Nasdaq has been decoupling recently, which shows that crypto is starting to act as an independent asset class. You should keep an eye on the volume-weighted average price because it often acts as a dynamic support or resistance level during intraday trading. If the USDT dominance bounces from its current support level, we could see a temporary correction in Bitcoin prices as traders move back into stablecoins to hedge their portfolios. It is vital to stay unemotional and stick to your trading plan regardless of the short-term noise in the market. The Fibonacci retracement levels drawn from the last swing low to the swing high show us that we are holding above the golden pocket ratio, which is a very bullish sign for trend continuation. We are also monitoring the fear and greed index, which is currently showing greed, but not extreme greed, meaning there is still room for the market to grow before it becomes irrational. Please remember that this analysis is based on probabilities and not certainties, so always do your own research before making any financial decisions. The weekly candle close will be very important to determine the trend for the next week, so we need to see Bitcoin close above the key pivot point to maintain the bullish structure. Ultimately, the market looks primed for a move and volatility is returning, so make sure you are prepared for whatever direction the market chooses to take. Massive symmetrical triangle forming on the hourly time frame for Bitcoin. This pattern is coiling up tight, and we are approaching the apex, which means a violent move is about to happen very soon. We need to see a strong breakout with high volume to confirm the direction, but the bias remains bullish as long as we hold the local support levels. The USDT dominance chart is printing a bearish engulfing candle on the 4-hour time frame, which signals that traders are selling stablecoins to buy back into Bitcoin. This flow of funds is exactly what we need to push prices through the overhead resistance. You must watch the funding rates because they are currently neutral, which suggests the market is not over-leveraged yet. A break above the current range high will open the doors for a rapid move to the next psychological target. Do not get shaken out by the low weekend volatility and stick to your trading strategy. Good luck and trade safe. Today, on the liquidation heatmaps and what they tell us about the next move for Bitcoin, we can see a massive cluster of short liquidations building up just above the current price action, which often acts as a magnetic zone for the market makers to target. The price is currently compressed within a tightening range, and this low volatility environment is usually the calm before the storm. When we look at the Tether dominance chart, we can see it is forming a bearish flag pattern on the daily time frame, which is an extremely bullish signal for the rest of the crypto market if it plays out. You need to pay attention to the exponential moving averages, specifically the 21-day EMA, because Bitcoin is trying to reclaim this level to flip the trend back to bullish. The stochastic RSI is crossing up from the oversold region, which indicates that the momentum is shifting in favor of the buyers in the short term. We must also look at the derivatives data, because the open interest has dropped significantly, meaning the market is cleaner and less prone to long cascades. If the US dominance loses its current support level, we will see a rapid flow of capital into Bitcoin that could trigger a massive green candle. The volume profile visible range shows a gap in liquidity above us, which means if we break resistance, the price could move up very quickly with little resistance.